How's it going, everybody? PK Investing here. This is the 7th video in my QYLD series where we discuss the income ETF and attempt to find answers to common questions that investors might have. In the description below, you'll find the link to my QYLD playlist, along with the link to my previous QYLD video. This video is going to continue right where the previous QYLD video left off, so I suggest you go back and watch it if you haven't already. Alright, let's get into it. As a quick refresher, let's restate what we've established so far about QYLD's share price. The first thing we discovered is that, contrary to popular belief, the price per share of QYLD has not gone down over time. We might notice some misleading trends over the short term, but if we pull back and take a look over the long term, we should see that QYLD's share price is roughly bounded between $20 and $25. The other thing we learned is that this share price is bounded by design, and it's maintained through the issuing of more shares. Today, we're going to explore these points further and try to find out how it all works. In order to continue, we need to recognize a very important fact about how ETFs issue more shares. You're probably more familiar with how individual companies issue more shares. The board approves the issuing of new shares, the shares are sold, and now there are more shares of that company being traded on the open market. This can result in share price dilution, and is often not in the best interests of current shareholders. ETFs, however, do things a bit differently. For ETFs, share creation is done by utilizing the net asset value, or NAV, of the fund. The net asset value of an ETF is basically the total sum of all the securities being held by that ETF minus the total liabilities. Net asset value can be interesting to look at, especially since it can lead to some good deals when it comes to buying shares of an ETF. For example, let's say that one share of an ETF is trading at $30 per share. Now let's say that we take the net asset value of that ETF, divide it by the number of outstanding shares, and realize that the share price should actually be $35. This means that the ETF is trading at a discount, meaning if you decide to buy in at $30 a share, you'll be getting a good deal. On the other hand, let's say that an ETF is trading at $30, but according to the net asset value, the price per share should be $25. This would mean that the ETF is trading at a premium, and buying in at $30 means you're paying extra. Now that we understand what net asset value is, let's take a look at QYLD's net asset value. There's a website called YCharts that has a lot of useful data. In the description below, I'll link to the specific page that I used. Feel free to play around with the dates and try to see if you can notice some trends yourself. So here's the 5-year chart for QYLD's net asset value. At first glance, what do you notice? I notice a general trend up over long periods of time, with dips in between. There are two major dips in this graph, and both correlate to market-wide corrections and crashes. The first dip, right there at the end of 2019, was the market correction that happened in December of that year. And of course, there's the massive COVID crash that happened in March of 2020. But despite those major dips, the net asset value of QYLD has recovered each time. There are many data points on this graph, too many to show in just one video, but if you follow the link to the website, they offer a table that has the net asset value for each specific date. If you have some time, try picking out random dates and comparing them to the market price of QYLD on that date. And try to see if you can find any days that offered good discounts. To make things simpler for those that didn't want to go to the website, YCharts did provide this short list of stats. Over the past 5 years, the minimum net asset value of QYLD was $17.83. And this was right at the bottom of the March 2020 COVID crash. The maximum net asset value was almost exactly 2 years earlier in March 2018. And the average net asset value for the fund is $22.89, right between that $20 to $25 range that we discussed earlier. Now I'm going to hold on for a second and ask you, the viewer, a question. What does this graph remind you of? Take a moment, pause the video, and type out in the comments section where you've seen this graph before. Here it is. Do you remember this graph? This is the 5-year share price history of QYLD that I showed in the previous video. Notice how the two graphs look very similar, and this is just a demonstration of the effect of the net asset value on the price per share. Now that we have all this information, along with the information from the previous video, we can comfortably say that the price of QYLD is not going down. If anything, the net asset value will continue to trend up and follow the bullishness of the tech sector. But I'd like to say that nothing is ever guaranteed, and anything can happen. Just because QYLD has recovered after every dip previously does not mean it will always recover. But that goes for anything you invest in. So make sure before you go buying a few thousand shares of QYLD or whatever else, do your own research, understand what you're getting into, and make sure you know what the potential risks and rewards are. Alright, with that said, I'd like to show you my own QYLD position. I currently own 542 shares of the income ETF, and that brings in around $119 each month. I usually reinvest a portion of that distribution back into QYLD in order to gradually keep that passive income flow growing. Thanks for watching until the end. If you learned something new or just enjoyed watching, give this video a like. There are still many aspects of QYLD that we haven't discussed, and I'll be making videos on those aspects, as well as many other topics. So subscribe to the channel if you haven't already, and hit that bell notification so you don't miss those future uploads. Take care, and I'll speak with you again real soon. I am not a financial advisor. Investing always involves risk. This video was created for entertainment purposes only.